Alibaba stock is up 46% in the past year and they are reporting earnings the 21st of August. So in this video, I am going to do an in-depth analysis of the company by looking at the financials, the forecast, some important statistics, using my spreadsheet to calculate the intrinsic value of BABA, looking at the main risk of investing in this company, as well as revealing whether or not I am adding more to my position. Starting with their financials, their revenue growth has been very consistent over the past 5 years, growing for 717 billion yuans all the way to 996 billion Chinese yuans, which is an average of 6.8% revenue growth per year. Regarding their profit, net income took a big hit in 2022, but it seems like it has nicely recovered since then and it is currently at 130 billion Chinese yuans. And one thing that I really like about this company is the number of shares outstanding. This company has been buying back a ton of shares, which is very positive for investors, as you are sharing the profits of the company with less people. And if we take a look at the financial forecast, Alibaba's revenue is expected to keep growing very nicely at around 8% per year. And EPS as well is expected to keep growing. Then, in order to calculate the intrinsic value of Alibaba, I use my spreadsheet, which tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. It is essentially a discounted net income and free cash flow model, and as you can see, the intrinsic value according to my low assumptions is $100 per share, middle $180 per share, and high $297 per share. The stock is currently trading at $121 per share. This means that if my low assumptions occur, you're going to make a 6.5% annual return on your money, middle 17.5%, and high 27.6%. And I believe my assumptions are reasonable, as I have the company growing between 5% and 11% revenue for the next 7 years, averaging a profit margin and free cash flow margin between 10 and 18%, because as you can see, over the past few years, their free cash flow margin has been between 10 and 20%. And I also assigned the PM price to free cash flow at the end of the 7 years of 16, 18, and 20. And I left the share outstanding change the same, but as we have seen, they have been buying back a ton of shares. If we assume they buy back 2% of their shares annually for the next 7 years, the returns become even better. And now, according to my low assumptions, you would get an 8.8% annual return on your money, middle 20%, and high 30.4%. I'm going to leave a link in the description below in case you want to get the spreadsheet. It is very simple to use because I've done all the calculations in the background, so you only need to focus on these inputs right here. Regarding the balance sheet, Alibaba has $58.9 billion in cash and $39.19 billion in debt. So it is a very good balance sheet as they have more cash than debt. Now let's take a quick look at the main risk of investing in Alibaba. Number 1 is the regulatory and political pressure in China. Alibaba operates under heavy scrutiny from Chinese regulators. Crackdowns on big tech, anti-monopoly fines, and restrictions on data security or fintech could limit its growth and profitability. Being a high-profile company makes it a constant target for government intervention. Number 2 is the US-China geopolitical tensions. As a Chinese company listed on the US exchanges, Alibaba faces delisting risk if it doesn't comply with US audit requirements. Broader US-China tensions such as tariffs, sanctions, or restrictions from Chinese firms could hurt investor confidence and business operations. And finally, number 3 is the slowing growth in e-commerce. Because they are facing tougher competition from JD.com, Pinduoduo, Douyin, and others, growth is no longer as explosive as before, which could compress its valuation multiples. In terms of the valuation ratios, they are currently trading at a forward PE of 13, which is quite cheap. The price to free cash flow is currently 25, but this is gonna get a lot better next year because free cash flow is expected to improve. And the price to sales is 2, which is also quite cheap. I believe Alibaba is a fantastic company that still has a lot of growth potential, that is currently down from its all-time high because of short-term risks. But I am personally not going to add more to my portfolio because, as you can see, it is already my second largest position, and I will only add more if the stock falls in earnings below $100 per share. I hope you found this video valuable. Let me know what you think about Alibaba stock in the comments, and I'll see you in the next one.